Um, my name is Sam Cabriales from Arrondo Cabriales CPAs. I want to take the time today to talk about some important tips for business owners to get significant tax savings. One of them is the Augusta rule, which allows you to rent your home to yourself for 14 days, and you pretty much don't pay any tax on that money. You just got to find like the fair rental value, and you can use your house to do an office party for your employees and customers, vendors, etc. You can also use it to create videos like this one, or do conferences that are business related through Zoom, etc. So that gets you tax-free income. So pretty much you get to deduct it in your business, then claim it on the personal, and then take a deduction, special deduction called the Augusta deduction, and then not pay any tax on it. So that creates, say for example, you're able to rent $500 every day. Once you find the value that you would rent a significant office space or anything in the like that resembles what you're using of your home, if it's $500 times the 14 days, you get to save based on your tax rate between $1,500 to $2,000 in taxes, right? Assuming you pay 20 to 30% in taxes. So you definitely want to take advantage of this Augusta rule if you have a business. So you got to get creative and figure out if there's ways in which your business can rent your home for not more than 14 days and get that significant tax deduction. Linked to that is if you have a home office where an area of your home that you specifically use for business, you can also do that as well. So say you have a little office and it's 100 square feet, you can take the safe harbor deduction, or you can take the direct expenses and indirect expenses attributable to that office space in your home and get the home office deduction. But the area has to specifically be used for business, and you have to be able to document in some way and make sure that it audits you. You're able to prove that that area is for business. So going on to that, another strategy you can use is do income shifting. So say you're self-employed, you own your LLC, and you have a son or daughter who is 12 years old, 13 years old. You can hire them and they can make up to the not more than the standard deduction. It's pretty much not subject to Social Security tax, not subject to Medicare tax, income tax, because you're not going over the standard, and no unemployment taxes as well. So it creates some significant savings in paying your dependents for working for you in your business without having to pay any tax, and it creates a shifting of the income from a higher tax bracket to a lower, to a zero bracket maybe. So that is also a strategy. I also wanted to mention there's paying your kids for royalties, and doing like a royalty contract is an option. Let's say for example you have a business where you need to be handing stuff to your customers, where you present your face or your child's face. You can pay yourself royalties, which creates passive income, which is taxed at a lower rate than self-employment income. Or you can pay your kids royalties and not more than the standard deduction, and potentially find some savings. Another thing I wanted to discuss in this is you can reimburse yourself for expenses paid personally, like say for example miles. If you track your miles using applications like Mile IQ, QuickBooks Self-Employed, or some other application that can track your mileage, you can get significant savings by taking a mileage reimbursement. Now this is more ideal for corporations and things like that to get reimbursements, but always consult with your tax professional. And if you have any questions, you can always reach out to us. I recommend you write a message here. We'll get back to you as soon as possible. If you need to reach us directly, you can dial 956-519-3773. Again, this is Sam Cabriales with Arredondo Cabriales CPAs. I certainly appreciate the time you took to watch my video. If you want to get more content like this, go ahead and subscribe for my channel, and have a great day.